Welcome to our new IFRS Sharefront series. It's an initiative of OJ Inspection Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards (IFRS) through a multiple choice question and answer approach. It is intended to make learning verification, mastery, and intellectual assurance fun. In this session, we shall be considering cumulative set 210 questions to which the answers have been provided on IFRS 5. This is the standard on non-current assets held for sale and discontinued operations. Viewers or subscribers have 30 seconds to select or choose the answer to each question. The answers to the cumulative 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 11. Non-current assets classified as held for distribution to owners acting in their capacity as owners are A. Measured in line with IAS 1. B. Measured in line with IFRS 7. C. Measured in line with IAS 24. D. Measured in line with IFRS 5. E. Not covered yet by any specific IFRS. Some counts. Ten seconds gone. $20 seconds gone. Time up. Question number 12. One of the following sets of assets do not come under IFRS 5 where they are not part of a disposal group. A. Inventories. B. Intangible assets. C. Property, plant, and equipment. D. Investment property. E. None of the above. Some counts. $10 seconds gone. $20 seconds gone. Time up. Question number 13. IFRS 5 does not cover A. A non-current asset that is to be abandoned. B. A non-current asset classified as held for sale. C. A non-current asset classified as held for distribution to owners acting in their capacity as owners. D. All of the above. E. None of the above. Some counts. $10 seconds gone. $20 seconds gone. Time up. Question number 14. A disposal group classified as held for distribution to owners are measured at A. The lower of current amount and recoverable amount. B. The lower of current amount and fair value less cost to sell. C. The lower of current amount and fair value less cost to distribute. D. The lower of cost and net realizable value. E. The lower of fair value less cost of disposal and value in use. Some counts. $10 seconds gone. $20 seconds gone. Time up. Question number 15. One of the following is not a condition for a non-current asset to be classified as held for sale. A. The sale must be highly probable. B. The asset has been fully depreciated. C. The appropriate level of management must be committed to a plan to sell the asset. D. There's a program to locate a buyer. E. The asset must be actively marketed for sale at a reasonable price in relation to its current value. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 16. Where a non-current asset held for sale is acquired as part of a business combination, it is measured at A, the lower of current amount and fair value less cost to sell. B, the lower of current amount and recoverable amount. C, the lower of current amount and fair value less cost to distribute. D, fair value less cost to sell. E, the lower of fair value less cost of disposal and value in use. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 17. An entity measures cost to sell at what value when sale is expected to occur after a year? A, nominal value. B, future value. C, forth value. D, market value. E, present value. Some counts. 10 seconds done. 20 seconds done. Time up. Question number 18. Just before the initial classification of property, plant, and equipment as held for sale, the current amount is determined by applying A, IAS 36 only, B, IAS 16 only, C, IAS 16 and 36, D, IFRS 5, E, IAS 1. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 19. Which of these is incorrect about the disposal group? A, they may contain only assets. B, they may contain assets and liabilities. C, all the components are measured under IFRS 5. D, some components are measured under other standards. E, they may include goodwill acquired in a business combination. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 20. On measurement requirements, which of these standards comes closest to IFRS 5? A, IAS 16, B, IAS 36, C, IFRS 8, D, IFRS 7, E, IFRS 15. Some counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to reveal the answers. The answer to question number 11 is D, measured in line with IFRS 5. D, measured in line with IFRS 5. The classification, presentation, and measurement requirements in IFRS 5 also apply to non-current assets or disposal groups that are classified as held for distribution to owners in their capacity as owners. D is the answer to question number 11. Question number 12. The answer to question number 12 is A, inventories. A, inventories. Where inventories are not part of a disposal group, they are not assets to which IFRS 5 applies as they are current assets. IFRS 5, apart from disposal group, applies only to non-current assets that meet certain conditions. A is the answer to question number 12. Question number 13. The answer to question number 13 is A, a non-current asset that is to be abandoned. A non-current asset that is to be abandoned. IFRS 5 prohibits an entity from classifying a non-current asset or a disposal group that is to be abandoned as held for sale. The basis for this is that non-current assets that are to be abandoned will be recovered principally through continuing use. Assets in options B and C are covered by IFRS 5. A is the answer to question number 13. Question number 14. The answer to question number 14 is C, the lower of carrying amount and fair value less cost to distribute. C, the lower of carrying amount and fair value less cost to distribute. Non-current assets or disposal group classified as held for distribution to owners are measured at the lower of their carrying amounts and fair value less cost to distribute. C is the answer to question number 14. Question number 15. The answer to question number 15 is B, the asset has been fully depreciated. B, the asset has been fully depreciated. All the conditions in the options are conditions for a non-current asset to be classified as held for sale, except for option B. A non-current asset is not required to be fully depreciated to be classified as non-current asset held for sale. B is the answer to question number 15. Question number 16. The answer to question number 16 is D, fair value less cost to sell. D, fair value less cost to sell. Non-current asset classified as held for sale that is acquired as part of a business combination is measured at fair value less cost to sell. D is the answer to question number 16. Question number 17. The answer to question number 17 is E, present value. E, present value. IFRS states that when a sale is expected to occur beyond 1 year, an entity measures the cost to sell at their present value. E is the answer to question number 17. Question number 18. The answer to question number 18 is C, IFRS 16 and 36. C, IFRS 16 and 36. It is provided in IFRS 5 that immediately before the initial classification of an asset held for sale, the carrying amount of the asset is measured in line with applicable IFRSs. IFRS 16 is on property, plant, and equipment, while IFRS 36 is on impairment of assets. C is the answer to question number 18. Question number 19. The answer to question number 19 is C, all the components are measured under IFRS 5. C, all the components are measured under IFRS 5. As subsequent measurements, assets and liabilities in the disposal group are measured in line with applicable IFRSs, where the assets and liabilities are outside of the scope of measurement of IFRS 5. All the components may not be measured under IFRS 5. C is the answer to question number 19. Question number 20. The answer to question number 20 is B, IFRS 36. B, IFRS 36. IAS 36 is titled Impairment of Assets, deals with the determination of impairment losses on non-current assets and cost of disposal is associated with ascertaining a recoverable amount. IAS 36 titled Impairment of Assets deals with the determination of impairment losses on non-current assets and cost of disposal is associated with ascertaining a recoverable amount. Apart from the determination of the likely inflow that may arise on the giving out of a non-current asset under both IFRS 5 and IAS 36, the meaning of cost of disposal and cost to sell under IAS 36 and IFRS 5 respectively are the same in substance. IFRS 7, 8, 15, and IAS 16 do not have similar measuring requirements with IFRS 5 in most aspects. B is the answer to question number 20. That is all for this set 2. Thank you for joining us for the set 2 of IFRS 5, non-current assets held for sale and discontinued operations. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all of those subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the service are reserved for OJ Instruction Limited. Thank you once again and bye for now.